People have been chasing gold for centuries. They call it a safe haven, the ultimate store of wealth. They worship it, hoard it, and obsess over its price. But quietly, something else is happening. Something almost no one is talking about. Silver is taking its place. And the math behind it, it's not just surprising, it's uncomfortable. Because if you're invested in gold, if you're counting on the old rule, they might already be changing. And by the time the crowd notices, it could be too late. Why silver now? Let's start with the obvious. Silver is cheap. Historically, gold has been treated like the crown jewel of wealth, and silver the understudy. But cheap can be dangerous, not for buyers, for the system itself. Here's why this matters. Governments, central banks, and even corporations have been quietly stockpiling silver, not because it shines, not because it decorates jewelry, but because it does something gold can't, at least not at the same scale. Over the last 20 years, global demand for silver has shifted in ways almost no one sees. Industrial demand is skyrocketing. From electronics to solar panels, from electric vehicles to advanced medical devices, and supply, it's stubbornly finite. In fact, new silver production has barely increased in decades. Put those numbers together and you see a quiet tension forming, a tension between what people think is valuable and what actually is. To understand why silver is quietly replacing gold, you need to see the hidden mechanics. First, the market. Gold has long been the darling of central banks. They hold it in vaults. It's slow-moving, predictable. Silver, less predictable, but it's increasingly essential. Second, industrial leverage. Roughly 60% of silver is consumed by industry. Compare that to gold, which is mostly stored as an investment or jewelry. When an economy shifts, say a tech boom or green energy surge, silver demand spikes. Gold stays ornamental. Third, the futures market. Here's where the math becomes uncomfortable. Silver is traded at ratios that make it vulnerable to manipulation. 1 ton of physical silver can influence billions in paper contracts. Investors assume these markets reflect reality, but they don't. Not entirely. And finally, scarcity. Annual silver mining adds barely 25,000 tons to the market, but industrial consumption alone is already higher. That means each year, more silver is consumed than mined. In other words, the system is slowly eating itself. Cut to a simple chart. Annual mined silver versus annual industrial consumption. Now, imagine this on a 10-year horizon or a 20-year horizon. It's not just a gap, it's a chasm. Numbers don't lie. Let's do the math. Silver's market capitalization is roughly 1/80 of gold's. Yet in some crucial applications, solar panels, EV batteries, electronics, its industrial importance is increasing exponentially. That's right, the world's economy is using silver faster than it can be replaced. Meanwhile, gold continues its centuries-long mythos, and investors keep buying gold, blind to the subtle shift beneath their feet. Here's the irony. The cheap metal might end up being the one that defines wealth in the 21st century, not gold, silver. Now, here's where it gets interesting. Public perception is a funny thing. Gold gets headlines. Silver barely makes the news. But if you look closer, silver is moving quietly in the background. Consider investment trends, exchange-traded funds, industrial stockpiles, tech company inventories. The smart money, the institutions, the insiders, they're acting now. Meanwhile, retail investors are still obsessing over gold charts, mining stocks, and old myths. The crowd hasn't caught up yet. And when it does, well, history suggests that catching up late is usually painful. And this isn't just a story about metals, it's a story about the global economy, energy, technology, and hidden incentives. Silver's rise could redefine investment portfolios. It could influence inflation hedges. It could even affect monetary policy, especially if central banks start factoring industrial metals into reserves. But there are risks: supply chain disruptions, technological breakthroughs, regulatory changes. Any of these could derail the quiet shift, and the markets are never perfectly rational. Still, the trajectory is clear. Silver's quiet revolution is already underway, and the consequences, though subtle today, could be seismic tomorrow. Visual, time-lapse montage of industrial growth, EV adoption, solar panel installations, coins stacking higher. So, what does this mean for you? Maybe nothing, maybe everything. Silver isn't flashy, it doesn't carry the glamour of gold, but history has a way of rewarding the patient, the observant, and punishing the complacent. The truth is, the world is changing beneath the shine of gold, and silver is quietly taking its place. The final question, when everyone finally notices, will there even be enough silver left to matter?